Hey, welcome back to Everyday Economics, the podcast that helps you learn about the economic world happening around you every day. I'm your host, Chris Krug, president of the 501c3 nonprofit Franklin News Foundation. Everyday Economics is a production of America's Talking Network. You can check out all of our great podcasts at americastalking.com. To support Everyday Economics and podcasts just like this one, please make your tax-deductible charitable contribution by clicking the link in the show description. We are recording today's episode on Thursday, May 25th. And joining me as always, my partner, Dr. Orphe Divounguy, PhD economist. We talk about a lot of reports and a lot of, try to convey information to people to help them to make sense, of course, of the economy and how it works and different parts of it that might be applicable to them, and just answer questions that we think that average people might be asking. And you and I think, just for the record, you and I consider ourselves to be average people, right? So we're making this for our tribe here. But the Federal Reserve Stability Report recently came out, and I have my hand up in the air. I had not previously been aware that there was such a thing. And so there's all kinds of data, all kinds of reports that are coming out. What makes the Federal Reserve Stability Report of interest to Americans who want to understand the economy?
Remember the Fed's job, right? Price stability, right? So low and stable inflation, but also low unemployment. So very much stuff the American people should care about, because we all want jobs and we don't want prices to grow out of control, because it matters for our lives, our daily lives, our future, et cetera, right? And so important, the Financial Stability Report kind of summarizes the Federal Reserve's framework for assessing the resilience of the U.S. financial system. And basically it presents the board, the Federal Reserve Board, a current assessment of where we are, like where we are, how households are doing, businesses are doing. We talked about commercial real estate on another podcast, right? And so, it gives us a good picture of how resilient the U.S. economy is and how well people are doing.
So let's talk about what the picture tells you. So the stability report for May is out. And if you would like to read more about this, listening to us here at Everyday Economics, if you'd like to go and read the financial stability report, there's no magic to it. Just go to federalreserve.gov, federalreserve.gov, and you'll be able to find the May financial stability report. But what does it say to you?
Well, it says to me that we're in pretty good shape. You see, they report on valuations, like in real estate, for example, and, still pretty high. Commercial real estate, still pretty high. Households still have some excess savings. So let's put it this way, things are deteriorating, but households and businesses are still in pretty good shape. And the financial system is still very sound and resilient. And you don't have, the types of issues that you see, like the YouTubers claiming, right? That like, there's a big crash coming. Right? No, this looks pretty good. Things are deteriorating, and they're supposed to, given the Fed has raised its key policy rate by 5 percentage points in the last year. Very much a record. I think we haven't seen anything like that since the 1970s. But everything looks good here. It looks good in the sense that Americans are taking that on the chin, and they had a lot of buffer going into this hiking cycle, right? A ton of excess savings. And they're still spending. So, the key summary here is, like, for example, real estate valuations remained very elevated, even though activity weakened, right? You saw in the prices for housing not tumbling all that much.
No. In my market, there's the scarcity of homes coming onto the market is impacting prices in the seller's favor in a pretty remarkable way right now, based on the data analysis from like the Zillow's estimate and the Redfin.
Totally, the real estate market, activity fell because supply and buyers pulled back, but also sellers pulled back, so valuation stayed somewhat elevated. You look at another one that they talk about in this report, the household debt, right? Household debt. We've talked about debt increasing, but debt remained at modest levels relative to GDP and was concentrated among prime-rated borrowers. In other words, the people who are taking out loans right now have excellent credit. They're doing very, very well. And so when you hear the YouTubers talking about, oh my goodness, debt levels have increased, there's going to be a crash, people won't be able to repay their bills. Well, look, the people who are taking out debt have excellent credit. And the debt is being extended to people who have the means to repay, is what this is saying. Also, wage growth remains pretty elevated, right? And so, and by the way, you look at the stock market, yes, there's been a ton of ups and downs, but you're looking at the stock market year to date, and it's doing pretty well.
There's some interesting sector growth. I don't know if you happen to notice NVIDIA, the chip maker, but on the forefront of all that's going on with artificial intelligence and what people believe, AI's role could be in the future, a stock that was already valued around $300 a share went up another 25%, but in overnight trading, that was a pretty massive.
It was up 100%, over 100% last time I checked.
That's crazy.
Right? We had a little bit of risk, right? The bank trouble, and the Fed and Treasury acted swiftly to support the banking system. Now, it's likely that again, the Fed own surveys show that basically there's some credit tightening underway, but we're still in good shape. This is exactly what this report is showing. So what I'm seeing basically is that the risk of a hard landing is very low. I think unless something really major happens, some shock, some crazy thing, I think we're on the path to a soft landing. The U.S. economy is still doing well.
Let's bring it to a close there. Thanks again, Dr. O, for Orphe Divounguy. This has been Chris Krug. Subscribe to Everyday Economics at americastalking.com.